Hello and a very warm welcome to the show. Thank you so much for choosing Smart 24 TV, where we drive your business 24/7. We give you business content and business news. My name is Anthony, and this is another episode of Financial Markets, where we basically look at the financial markets space in Uganda and the opportunities that it provides for you to invest. And remember to follow on our different social medias. If you have any content or any feedback that you would want us to have, please give us comments in those YouTube comment sections. You can also follow us on X at Smart24TV now. Now, happening next week is going to be the Capital Markets Economic Development Forum, and it's going to be at Kampala Serena Hotel. And one of the key highlights of this event is that Bank of Uganda is partnering with the Capital Markets Authority to bring us this event. And of course, the theme to provide funding for the tenfold program, the government tenfold growth program, where we're looking at the 2040 vision, where we want to grow our GDP to at least over 500 billion. That is a tenfold program that the president is very interested in. But how are we funding this, especially in the light of capital markets? Now, we couldn't prepare much more for this event than have a Bank of Uganda itself. And today, I'm very pleased to have Mr. Bagubwagye Arnold, who is the acting director of financial markets development at the Bank of Uganda. You're most welcome, Mr. Bagubwagye. The name is quite tricky, but you're most welcome to the show.
Thank you very much, and I'm glad to be here on Smart TV.
Yeah.
Thank you.
Yeah. So tell us about what you do, first of all, as the acting director of financial markets development, especially given that your department has financial markets in it. It means there's a lot of work under there. What do you do?
Yeah, thank you very much. And once again, I'd like to say hello to the viewers out there. So financial market development is a new department at the Bank of Uganda. And it was coined out of the financial markets department, which more or less we can say handles the operations. So the bank in its vision felt that they needed to raise the profile of financial market development, and therefore they created a department which is separate from the operational side. Now, the point is that, in the current environment, in the current economic environment, the financial markets play a critical role in the implementation of monetary policy, in ability to raise capital for the government, and the ability to strengthen the resilience of the economy from shocks. So as a result, we needed to give it a stronger focus, better resources, increased personnel, and more visibility, to raise the profile of financial market development. And that is part of the reason why we are hosting this event coming up on Wednesday next week, because the whole discussion is how can financial markets contribute to the tenfold growth. And we feel that there's a lot of untapped potential, and that is entirely why we're here. So Bank of Uganda felt that we need to raise the profile of market development, and that's why they created a department.
Amazing. So in terms of the development of the markets, where do you see, have we achieved something in as far as financial markets penetration is concerned? Because when you look at one of the key drawbacks of these markets is that there's very little information out there about this. You find that there's just a certain few people who know about investing in fixed incomes, in the shares or equity markets, and that limits our growth. We want to grow to the point of maybe the New York Stock Exchange and so on. But where do you see us from the time we started to today? What have we achieved?
Okay, that's a very relevant question. So, the markets really started after the liberalization of the current and capital accounts in the mid-90s. We had the capital markets being set up. We had the stock exchange being set up. That was in the late 90s. And then we also we are trading trading foreign exchange in the interbank market. We started issuing securities, bonds in 2004. So we have observed a pickup in activity. That's as a matter of fact, right? They're still teething problems, especially in certain segments of the market. For example, in the retail group, retail investors are you and I.
Yes.
The individuals, the people who they call Mufuna Ampola, so those currently hold about 3% of total outstanding government securities, which is still very small.
3%.
3% of government securities. I'm not going to talk too much about what's happening at the exchange because that's another segment of the financial markets, the equities market. So I'm going to focus on the fixed income market side, which is precisely the space in which we play. But the markets, I would like to compare Uganda's market to peers in the region, because that sort of gives it context, specifically on the fixed income side. And there's an index called the Africa Financial Market Index, which started in 2016, and it rates about 26 African countries, which hold a total of 80% of the GDP of Africa. So in 2016, when this index commenced, Uganda's position was number 10. We're number 10 out of the 26 countries, right? As we speak, we're number 4. That goes to show you the level of advancement that we've made, baby steps. If I'm talking about liquidity in the government securities market, by liquidity, I mean the ease in which you can buy and sell the securities. And we measure it based on turnover, okay? How many times do instruments change hands in a year? Okay, so you buy an instrument and you're able to sell it. So that is the liquidity. So the liquidity in about 2019, that was before we carried out reforms to the primary dealership system, was about 54%. Okay, so that essentially means that the total outstanding securities, only half of them are traded during the year. It means
that's on the primary or secondary market?
That is on the secondary market.
On the secondary market.
Yes.
So if they're issued 100%, then we have only half of that.
Half of that was traded.
Was traded on the secondary market.
Yes. Wow. That was in 2014.
Yes.
I mean, in 2019. Now, we carried out reforms to the primary dealership system in 2020. And that shot up significantly. Okay. The first year after the reforms, it moved up to 120%.
Wow.
And this year, we're likely to record 200%. Wow. Now, this 200% is without the securities that are held by NSSF and by the pension funds, because these hold to maturity, right? Yeah. We also need to have that discussion with our colleagues in the pension sector space, so that we can have some of those instruments come into market. But just to give this context, South Africa, which is the most liquid market in the region, turns over about 1,400%. Wow. That means that an instrument will change hands 14 times in a year. I will buy it and I will sell it to you, sell it to the next 14 other people, right? For us here, it's only two times. People. But again, within context, Uganda is the most liquid market in the region, second to South Africa, and probably fourth in Africa, behind South Africa, Nigeria, and Mauritius, right? Wow. We're more liquid than all the other markets in the region on the fixed income side. Wow. But having said that, this is like some people say it, comparing dwarfs. There's much more that can be done. When you talk about products, okay, unfortunately, we only have one product called fixed income treasury securities. This is government securities. We have not tapped into all the other products, which, if you give me an opportunity, I can explain. And that is partly the reason why we're now focusing on this area. Because we're saying we've been issuing instruments for a long time, but how come we have not been able to develop other instruments? That is more or less a state of where we are.
This sounds too good to be true, honestly. When you say we are taking the 4th place out of the 16 countries that are tracked by this index, it shows a lot of progress. But like you said, there's still room for more growth, and we still have, the sky is the limit to go. But then talking about products, in the fixed incomes, to my understanding and to most of the viewers, I see 2 products, the treasury bonds and the treasury bills. What could be some of the other products that you think can stem from these 2?
That's very good. Actually, you can see 2 products, but it's more or less one. It's one issuer, which is the government. Sure. The difference is treasury bills are short term, 91 days or 3 months up to 1 year, and anything after that are bonds. Yep. Now, there's several other products that have just not been tapped into because there's not been a focus on developing that space, and that's where we come from. I can give you an example. The diaspora community, the Ugandans living there in the diaspora, currently remit about $1.3 billion US. That is probably one of the top 2 export earnings, foreign exchange earnings for the country.
Yeah, remittances.
And 80% of these remittances are sent for consumption purposes, sending some money home for Jaja, to support your sibling going to school, those kind of things. 80%.
Not investment.
Not investment.
Yeah.
And the reason is that we have not developed an investment product for them. Okay, of course, there's some other things like there's no infrastructure because people are investing remotely. They need some technology to be able to access the markets, etc. But that is a product that needs to be tapped into. Okay, because we believe that if you developed a diaspora bond and addressed the small nitty-gritty issues like KYC, like the platform through which these people are going to submit their investments, that 1.3 can grow to 5 billion in a space of 2-3 years.
Yeah.
Because these guys already have access to cheap financing in the diaspora, right? And they can be able to send this money. And fortunately, because of the nature of the diaspora community, the proceeds or the interest that they would have earned is likely to remain here for development projects, construction, farming, etc. That's just one product.
Yeah.
We're talking about local government bonds, okay? Local governments in your Entebbe municipality, Kampala City Council Authority, Masaka, Kawale, etc. don't need to wait for government to be able to, for the central government to give them money. They can structure instruments, right, that are self-financing. I'll give an example. For example, let's say KCCA is preparing some parking arrangement within the city. Okay, parking fees. They can issue an instrument that can be able to prepare maybe parking infrastructure, buildings, and that kind of thing. And the fees that you're going to pay for the parking will be able to pay back the instrument. So these are all modern ways.
Issue as well.
Kasasiro issues, exactly. So everyone would be able to pay for their rubbish.
Fund that, and then they will pay the back.
Absolutely.
People are paying for
Absolutely. I mean, even if we talk about Chitezi, there are things like housing bonds. You can issue a housing bond for low-cost housing. People will be able to buy the housing bond. The proceeds will go into construction of low-cost housing, and those who are buying that low-cost housing will go back and pay the bond.
Yeah, it's a cycle.
Absolutely. I mean, the topical area of sustainability and climate bonds. There are so many investors out there who are looking to invest in sustainable bonds, ESG. Okay. If we created a green bond, maybe to support some solar lighting, maybe to support some clean water harvesting project, or something of the sort. Blue bond, to support the water cleansing process. So all these are opportunities that are out there in the fixed income market and that can help diversify the product range and attract new money into this economy, which money is not coming in right now because the products don't exist.
Amazing. Yeah. Now, looking at this program, or rather this event that's coming up on Wednesday, the theme is providing a platform for funding the planned tenfold growth. Tell us explicitly about this tenfold growth, because the president is very passionate when he's talking about it, but some people don't quite understand what this entails. What is this tenfold growth initiative?
Okay, that's a good question. So currently, Uganda's GDP is at about 49.5 billion. And by tenfold growth, we mean that in 15 years' time, by 2040, we are targeting growing the economy to 500 billion, right? 10 times the value that it is today, right? Now, this tenfold growth is centered around the ATMs. We call it ATMs, okay? Agriculture, industrialization, tourism, mining, science, technology, and innovation, the ATMs, okay? Now, look at the sources of funding for this tenfold growth. The traditional sources of funding, revenue, export earnings, FDI, etc., okay? We are saying that the financial markets can make a significant contribution towards funding this tenfold growth. I'll give you an example. Currently, we auction securities on bonds on a monthly basis. And every bond auction is in the region of probably 900 to 1 trillion shillings, right? And these are always oversubscribed, okay? The auction date is a Wednesday. On that Wednesday, we get the 1 trillion shillings. Government gets the money because we have built credibility as a country, in terms of our macroeconomic management. Now, imagine that you issue.
That's every 2 weeks.
That is every 2 weeks, yes.
For the bonds and every week for the.
Every 2 weeks for the bills and once a month for the bonds.
Once a month for the bonds.
Yes. Okay. So imagine you issued a diaspora bond and you have sold it widely. Okay. On the day that you're supposed to receive the money, you have an infusion of funds into your market, of foreign exchange, first of all, because it's coming from the diaspora. So you're in a position to build up your foreign exchange buffers, and then you will have sufficient money to be able to fund the government programs. Now, what is very interesting is that you're also diversifying your investor base. Because right now you have commercial banks that are investing heavily in government securities. But when you have more competition from a new category called the diaspora, you're diversifying your investor base. This means that you're reducing the concentration of commercial banks, and therefore they'll have all this excess money, which then will lead to increased private sector credit. So it is a win-win. So the banks will have to go out and lend to you and I, the ordinary people. Because right now they're investing a lot in So that's just one example, okay? I'll give you another example of climate, all these climate bonds, green bonds. There are investors out there who within their portfolio, they can only invest in instruments that have certain qualifications, meet certain sustainability requirements, sustainability aspects. If you issue the green bond, then you're going to target those investors, and that's going to be new money coming into your economy. We're talking about things like securitization. We already have infrastructure, okay? Infrastructure like electricity transmission lines, like the toll roads. You can securitize the receivables. There's a process, of course. You create an SPV, securitize the receivables and front load them, right? And then this money can be used to construct other infrastructure. You see? So we have not leveraged the domestic resources sufficiently. There's a lot of money within the system that we need to leverage through coming out with unique products that should be able to attract investors both domestically and externally. I'll just give you one other example. There's a retail product called Okusevinga, which is designed for the bottom of the pyramid, the Mwananchi. Okay? This one will facilitate people to invest up to, a minimum of 10,000 shillings using their mobile phones and their mobile money. Okay? Because right now, there's no product on mobile money that enables you to invest for government. But if we, after we launch this product, it will be able to facilitate that investment. So long and short of it is, it is another source of capital for the tenfold growth. It is looking at new investment and new investment from abroad as well. It is looking at inclusion, utilizing their domestic resources, and in the process we will diversify the sources of revenue to stimulate that tenfold growth.
Amazing. We're going to take a very quick breather, and when we come back, you're going to tell us about FMDQ. The chief guest is the CEO, Mr. Bola Onadele Koko. And he started this in 2013, and there have been several milestones, which I think we should copy or learn from this particular company. You're going to tell us about it when we return. My name is Anthony. I'm with Mr. Arnold Bagubwagye, and he is acting director of the Financial Markets Development Department at Bank of Uganda. Next week on Wednesday, they have an event in conjunction with CMA, and he's going to tell us more about the chief guest, Mr. Koko. Don't touch your dial. Stay with us. We'll be right back.